Rigetti Computing is currently trading at $47.11, which is a significant move up of $3.88, representing an 8.98% gain on the day. Now, a pop like that on a stock this speculative immediately makes you think something big must have happened. And while the entire quantum sector is catching a bit of a bid today, a nearly 9% surge demands a closer look, because what most traders see is the excitement, the headline number. The expectation is that Rigetti is finally on the cusp of a major breakthrough. But the reality is that this volatility is the very definition of the high-stakes, high-risk world of quantum computing. And today's gain could easily be erased by tomorrow's market sentiment. This isn't a stable performer like Apple stock. This is a company trying to build the future, and its stock chart reflects that uncertainty every single second the market is open. Let's ground ourselves in the common belief about Rigetti. The narrative is straightforward. This is a pure-play investment in one of the most profound technological shifts in human history. Quantum computers promise to solve problems that are currently impossible for even the most powerful supercomputers. We're talking about designing new materials, creating new pharmaceuticals, optimizing global logistics, and breaking modern cryptography. The expectation, fueled by this incredible potential, is that if Rigetti can capture even a tiny fraction of this future market, its current valuation will look like an absolute bargain. It's the kind of story that gets a lot of traction on platforms like the Robinhood app or SoFi Invest, where investors are often looking for the next big thing, the next Nvidia stock before it became a behemoth. The allure is that you are getting in on the ground floor of something massive. This is the dream being sold. However, we have to contrast that with the sober reality. The reality is that we are in the earliest stages of quantum computing. The machines Rigetti and its competitors are building are noisy, error-prone, and have very limited practical applications right now. The term for this phase is the Noisy Intermediate Scale Quantum, or NISQ phase. The path from these machines to a fault-tolerant, commercially dominant quantum computer is incredibly long, expensive, and filled with immense scientific and engineering challenges. Rigetti is burning through cash at a formidable rate to fund its research and development and its fabrication facility. This is the critical detail that often gets lost in the excitement of a 9% daily gain. The company's survival and success depend not just on its technology, but on its ability to continue funding its operations until it can generate meaningful revenue, which could still be years away. This is where professional traders on platforms like Interactive Brokers focus, looking at the balance sheet and cash burn rate just as closely as the qubit count. They understand that innovation without a sustainable financial model is just a science project. Looking at the recent market action, today's volume is substantially higher than the daily average. This indicates strong conviction behind the move, but it doesn't tell us who is doing the buying. Is it institutional funds slowly building a position through a service like Fidelity Wealth Management? Or is it a surge of retail interest, perhaps coordinated through social media? High volume on a speculative name can sometimes precede a significant downturn, as early investors take profits. We've seen this pattern before in countless other technology stocks. Furthermore, we must consider the microeconomic environment. In a high-interest rate world, companies like Rigetti that are not yet profitable are punished severely. Their future theoretical profits are discounted back to the present at a higher rate, making them less attractive. The Federal Reserve's policy has more influence on Rigetti's stock price right now than any single technical paper they might publish. For those looking for investment help or considering self-investing, understanding this macroeconomic pressure is absolutely essential. A diversified approach, perhaps through a Fidelity ETFs or a managed account like Schwab Intelligent Portfolios, is often a prudent way to gain exposure to advanced tech without taking on single company risk. So, what does Rigetti actually do? Unlike some competitors who focus only on the quantum chip or the software, Rigetti is a full-stack company. They design and fabricate their own superconducting quantum processors in their own facility, Fab 1 in California. This vertical integration is their core strategic bet. The idea is that by controlling the entire process, from design to manufacturing, they can innovate faster and produce more powerful chips. They then make these processors available to clients, research labs, labs, corporations, and government agencies through their quantum cloud services platform. The expectation is that this control over the manufacturing process will be a decisive advantage. The reality is that it's also incredibly capital-intensive. It means Rigetti carries the enormous fixed costs of running a semiconductor fab, a burden that competitors who use third-party foundries don't have. It's a high-risk, high-reward strategy that could either lead to a dominant market position or drain the company of its resources before it reaches commercial scale. Their progress is measured in the quality and number of qubits on their processors, with names like their Aspen M system and the newer Anka systems marking key milestones. The market hangs on every announcement, looking for signs they are keeping pace or pulling ahead of giants like Google, IBM, and other well-funded players like IonQ. Let's talk about the future outlook and the scenarios that could play out. The bull case is clear. Rigetti's integrated manufacturing strategy pays off. They achieve a breakthrough in qubit coherence and scale, demonstrating what's called quantum advantage on a commercially relevant problem. This would likely trigger a massive influx of government and private sector contracts. They could become the go-to provider for quantum hardware, a foundational player in a new computing industry. In this scenario, today's price would seem absurdly low. Investors using a Fidelity brokerage account or the Fidelity mobile app to build a long-term position in their Fidelity IRAs would be handsomely rewarded. The online investment community would point to Rigetti as a case study in visionary tech investing. The bear case, however, is just as plausible. The reality is that the technical hurdles are immense. Quantum error correction, a necessary step for building truly useful machines, remains an unsolved problem. A competitor with a different technological approach, like trapped ion quantum or photonic quantum computing, could prove superior, making Rigetti's superconducting technology obsolete. And the most immediate risk is financial. The company could struggle to raise additional capital on favorable terms, leading to shareholder dilution, or, in a worst-case scenario, an inability to fund operations. We've seen many promising tech companies fail, not because their ideas were bad, but because they ran out of cash. This is the constant tension that investors in SoFi stocks and other high-growth names must manage. Their SoFi trading platform might show a big gain today, but the underlying business risk hasn't changed. Comment below with your honest opinion. Do you think superconducting qubits, like Rigetti's, will be the winning technology, or will another approach ultimately dominate the quantum space? In summary, the 9% surge in Rigetti stock today is a perfect microcosm of the investment itself. It reflects the immense expectation tied to the promise of quantum computing. It's a powerful narrative about changing the world. But the underlying reality is one of profound technical uncertainty, intense competition, and significant financial risk. The smart approach to an investment like this, whether through an individual brokerage account at a place like Interactive Brokers, or through fractional shares on Robinhood, is to see it for what it is, a speculative, long-term bet on a company trying to achieve the near impossible. The disconnect between the dream of a quantum future and the difficult reality of building it is where the opportunity and the danger lie. Understanding that distinction is the key to navigating this volatile but potentially transformative sector. Disclaimer: this content is for educational and informational purposes only. It is not financial or investment advice. Please do your own research or consult a licensed financial advisor before making any investment decisions. TWIP: don't forget to like, comment, and share. Subscribe for more finance updates and market insights.